Morning.
There we go. Good morning, everyone, and thank you for joining us for our weekly trade and tariff briefing. My name is David Carlbach. I am the Chief Operating Officer and Managing Director of Business Services for the World Trade Center, Utah, and I've been asked to facilitate today. Today, we'll begin with an update from Troy Keller, partner at Dorsey and Whitney, on recent discussions around trade and tariff policy. And then we will hear from Natalie Gochner from the Kempsey Gardner Policy Institute. She'll be speaking about tariffs from an economic perspective in advance of the July 8th suspension expiration. Just before we begin, a quick reminder that this briefing is being recorded. And if you have questions, please use the Q&A function. We'll do our best at the end to answer as many questions as possible. Troy, take it away.
David, thanks so much. Great to be here with everybody in our continuous quest for clarity and certainty, which I think is what businesses most need at the moment. We wanted to give an update on some of the discussions that have happened over the past week. We oftentimes will also give an update on the World Trade Center tracker, and that provides updates on executive orders and everything related to those. This week, for the first time, there haven't been any formal executive orders. So do still consult that tracker as it is updated immediately. It's on, again, the World Trade Center website. However, there has been a fair amount of activity on, quote, the deal side. So 2 days ago, Treasury Secretary Bessent appeared before House Ways and Means Committee, and he described in some detail the deal making that they're doing with countries around the world. He highlighted that 18 countries, which account for 90% of U.S. trade, how he described them as our most important trading partners, that's where their focus is. And Jay gave generally a positive update on those. He said it is highly likely that the tariff pause, and again, he was referring to the reciprocal tariffs, would be extended for countries that are negotiating with the administration in good faith. Didn't really call out anyone, although the later Commerce Secretary Lutnick gave a little bit of caution on the EU side, just saying that that bloc was, quote, more than thorny to negotiate with, and have expected the EU discussions to kind of come in towards the end in terms of deal making. So that one is probably not as optimistic as some of the others were reported to be. In particular, the China side, I think, as everyone probably is aware, who's on this call anyway, that the discussions were held earlier in London this week. And again, the White House was quite positive on the result of those, which was refreshing since in weeks past that those discussions had grown a little rocky. The broad strokes of an arrangement would be that China's 10% tariff on U.S. imports into China would stay. U.S. would be applying a 55% rate going forward. That rate, I think, was a little confusing at first, but it includes the 10% worldwide baseline reciprocal tariff, the 20% fentanyl tariff, and that's on top of stacked on top of the 25% pre-existing tariff that had existed on China. One other point, China said that while this is critical to discussions, that they would be restarting their supply or loosening the supply of rare earth minerals that had kind of been held up by delayed export licenses. They said that would happen. However, the caveat that the new licenses would have a 6-month term on them, kind of, providing that raising the question of whether those would be renewed at the end of that, and perhaps, ongoing discussions to come. That arrangement is not finalized yet. It apparently is contingent on the two presidents, President Trump and Xi, confirming that, and signing those. But once they do, then what does that mean? It does feel like that means that the reciprocal tariffs would not snap back on July 9th and August 12th, if that happens. But still with the significant tariffs, they're 55% on Chinese imports. We would expect back and forth to continue probably well into later in this year. Again, with our goal certainly of trying to get to some sort of clarity, and so waiting on the White House to get us that, which they have promised in the past that this is rocky, you got to live through it, but later in the year we will have finality. I don't, we do hope that is the case. One last thing I would say, just on the legal front, We're all aware that the IEPA, the statutory basis for the tariffs, for the reciprocal tariffs, was kind of shot down by the U.S. Court of International Trade a few weeks ago. That was appealed. There was a stay put on that order that struck them down. When that will be heard is we've got a little more clarity on that. A federal circuit court a couple of days ago said that we confirmed that the stay on that order would stay in place, meaning the reciprocal tariffs will continue until the court has a full hearing, which would not happen until July 31st. So in any event, that is an ongoing storyline, but we'll expect those to stay in place at least until then. And those are the updates that I thought made sense to share. And with that, we'll turn it over to Natalie.
Thanks, Troy. Hey, everybody, I'm excited to share some information with you. And when I was asked to do this, the thought that came to mind is I don't profess to be an expert on trade policy, but I do have a lot of background in macroeconomics. And so I thought, how about if I do some macroeconomic insights as they relate to trade policy? Of course, when we say macroeconomics, we're talking about the study of the entire economy and the behavior, the decision-making that goes into that, as opposed to microeconomics, where we're looking at just the economics of the firm. So here's my sort of summary. I'm going to give you a mixed bag this morning. Interestingly, our fundamentals, US and Utah, continue to be strong. We got CPI this week, inflation's in check, labor markets look okay. But there's a big but, and that is that the macroeconomic data is delayed by about 2 months. And then you got a lot of trade distortions in it, acceleration of things and the like. If you just think about Liberation Day, April 2nd, the pause, April 9th, 90 days, you got a July number that's, you got a July milestone that's going to affect a lot of these things. Uncertainty is the word of the year. And it's especially present because of the maximalist policies of the current administration. I'm borrowing from Libby Cantrell, who does work with PIMCO about the 5 Ds: deglobalization, deportation, DOGE, deficit finance tax cuts, and deregulation. Of course, in all of those, there's a mix of some good things and some bad things. And so there is a recession fear. And, I'm saying a flip of a coin on whether a policy-inflicted recession occurs. So if I look at real GDP state by state, this is ending in 2024. This is just really interesting for those of us in Utah. Look at that number. Utah exceeded every state in the country in economic growth in 2024. It's not even close. You can see South Carolina and DC are the only ones that are up in the 4%. Look at us among our Western peers, how strong Utah emerges. So that's sort of interesting. On the macroeconomic front, here's what CPI inflation looks like. We got the reading this week at 2.4%. You see it got as high as 9. If I look at the unemployment rate, just steady as she goes at under 4% in our nation. In Utah, it's like 3.1%. And in economic jargon, we're always asked about a soft landing. I'll just show you that the way you might define a soft landing is, do you have full employment and are you at target inflation? And I'm showing you those bounds there of, about 4.5% for full employment, 2% for target inflation. This is PCE core. So this is the personal consumption expenditures. That's what the Fed targets. And you can see that, this is pretty good economic numbers, everyone. But the plot's going to thicken. Here's real GDP growth year by year. And I just let you look at that for a minute. You can see the recessions shaded in gray. Of course, the last one being the pandemic recession. This fake economy here. I've got Wells Fargo's forecasts for 2025 and 2026 on there. And I just want you to see that moderation, that 1.6 number for 2025. You'll see that outside of recession, we don't have another number like that except for during the Great Recession time, when you see this in 2011. Wells, in their write-up, says we'll end the year at the slowest annual pace outside of recession going back to at least the early 1990s. And so let's be clear that these policies are affecting the macroeconomic data. I mentioned that uncertainty is the word of the year. I'm going to go through a series of these. There's something called the World Uncertainty Index. This is calculated by looking at the use of the word uncertain in the Economist magazine country reports. It far surpasses the pandemic right now, so that's troubling. Here's the Economic Policy Uncertainty Index. This is a group of economists that come up with this number. Here's the Trade Policy Uncertainty Index, looking at the 10 largest newspapers and the word trade matched with uncertainty. Okay, we've not seen anything like that. I mentioned a maximalist approach. Here's one way of measuring that, the number of executive orders in the first 100 days by administration, and you can see that, right? So we're very active. US economic policy, incredibly active. And I'm fond of the term, it's the economy stupid. That's the idea that economics drives politics. But right now we have politics or policy driving the economy. You got to look at the federal funds rate, interest rates. This is the rate that banks trade at, overnight trading numbers. And you can see we're at 4.33 for the effective federal funds rate. In yellow, I just have a forecast, which is a way of saying that when the Fed meets next week, they're not going to change it. And then when they meet, in July, they're not going to change it. This is just a personal forecast coming from me. I don't have the Fed making a change until December. But it's anybody's guess, but we are in an environment of these relatively higher interest rates coupled with a lot of uncertainty. So it all comes down to three types of policy: trade policy, tax policy, and regulatory policy. If you want to try and understand what the administration's trying to do, read Secretary Bessent's Wall Street Journal op-ed on May 4th. I thought it was the most clear, cogent explanation of what they're trying to do. I'm capturing it in terms of 5Ds, which you can see there, and I'm just going to briefly walk through each of these. On the deglobalization front, I've sort of had fun quoting our president as saying, God, country, and family are my favorite words, but I love tariffs even more. And I think he's shown that. And I could pull a whole bunch of things here, but the overwhelming economic evidence shows that, free trade is associated with economic success and prosperity. And some people are saying the economics profession could be proven wrong on this, but I think the evidence is compelling that if I trade with you and you trade with me, we both benefit. The economy grows. I want to just focus on Utah for just a minute. We're about 30th in population size, 28th in economic size, but we're 16th in exports per capita and 16th in exports as a percent of our economy. So trade policy really impacts Utah. Another way to look at that is exports as a share of personal income. Just looking at the Western states here, look at those impressive numbers. Who knew that Utah's engagement internationally was greater than Colorado's, greater than California's, greater than Arizona's? This is as a measure of the economy. Here's imports. Once again, now in this case, California is a big consumer. They have a stronger share than us, but I just can't overstate how important international commerce is to Utah. We can also look at it, Utah compared to the median state. So get out of the West and just look at the median state. You can see how we're higher on both the exports and imports front here. So, this is old news to all of you, but Trump's first term, effective tariff rate 1%. President Trump raises them. We're at 3%. Biden keeps them. Now, where are we at? Those are all under negotiation, but somehow I'm sort of tracking at about a 15% effective tariff rate when the dust settles. It'll be double digits, could be higher, could be lower, but you get a sense of the magnitude of the change. And here's another way of looking at it. Here's the effective tariff rate going all the way back in time. And you can just see in modern economic history how uncharted waters we're in, if that holds. So now I'm looking at the deportation, the D for that. And this is just some interesting data that shows the difference between encounters, border encounters, and border deportations. And, this is what our country's working through right now. It just is very unprecedented what happened during the Biden administration at our border. You can see that here. Now jumping to Doge, I don't know what to show you here. This is still playing out, but if we look at some of the billions of dollars of change in the federal government, you can see how some of those numbers shake out. And then deficit finance tax cuts. So this is the big, beautiful bill. This is not done. A lot of still to happen. But if you look at the expiring tax cuts and the amount that would be extended, this is a really big deal. This is, it's not expansionary because it's already on the books. But if it went away, it would be, a problem. And so I'm excited about the extension of these tax cuts, but you have to pair it with some things that take care of the deficit. And of course, we're not doing that. We're actually exempt, in this proposal, exempting tips from income tax, exempting overtime pay from income tax. You can see the fiscal notes down here on that, lifting the state and local tax, deduction. And so sometimes you have tax cuts that are financed by spending cuts, but in this case, we're doing it through borrowing. And then the other D is deregulation, which is a good thing for the economy. And I just wanted to give you a sense of scale. This is the cumulative economically significant final rules in the first year as calculated by our colleagues at George Washington University. And you see the point that, the Republican administrations believe in smaller government and less of a regulatory state. And that's a good thing for the economy. And you can see this is the current where we're at with Trump 47. But I thought you'd find it interesting to see how that plays out. This is why I'm saying that it's a mix of veggies and dessert. Sorry. Okay, so Michael Strain, who's an economist I follow quite closely, wrote in the Financial Times last month, President Trump's eagerness to de-escalate, willingness to pivot, and the resilience of the economy suggest the U.S. can avoid the worst. That does not mean it will achieve the best. Trump's trade war remains an astonishing act of self-sabotage that will slow growth and increase unemployment. Avoiding a recession is a perverse and tragic metric of success. Now, that is a provocative quote, but I think it's kind of interesting because so much of the macroeconomic conversation has really been about, are we going to have a recession? And Strain's point here is that that's not really what we should be talking about. We should be talking about what are the opportunities in an economy to thrive and to do well. So just in closing, then I'll answer a couple of questions. This is some new work being done by Moody's Analytics using a machine learning model to predict the probability of a U.S. recession in the next 12 months. But they've backcast the model to, look at it in the past. And what I find really interesting is you can see how in the current environment, how different it is from the past, right? That the machine learning model is seeing an increasing probability of recession, but it's like really uncertain. And that's the definition to me of a policy inflicted recession, because the thing about policy is you can change it on a dime. And you can't do that with exogenous shocks. You can't do that with structural imbalances. And so it's really a different environment that we're in. So this is, I've already shown you this slide, but this is sort of my summary of the macroeconomic insights, and let you kind of look through that. And I'll just jump down here to look at questions and see if I get anyone. Can we get a copy of the slide deck? Yes, you can. World Trade Center Utah has it. Any other questions you want me to entertain? You can pop in the question there, or I can jump back to David and Troy to hit me with some questions if you'd like.
Well, Natalie, while we're waiting, I'll be selfish. I've got a question I'm super interested in. You mentioned, you showed how Utah's position on the, on both imports and exports, and I found that super interesting. For our economy, how materially would you say that the trade is in terms of how much of an impact could the tariffs have on our state? Would they have an outsized impact? And there might not be data,
Yeah.
right?
Oh,
But
yeah,
if
no.
there is, yeah.
No, I would think an oversized impact, right? And a way to think of it, we have about a $200 billion economy here in Utah. We export, I'm rounding numbers, but $17 billion worth of products, and we import about $25 billion of products. So just add 16 and 25, and you start to get a sense of the trade that's happening in a $200 billion economy. It's a major part of who we are, what we are. And I see the tariffs as a huge risk to the Utah economy. It just turns out that we start from a better place than everybody else. We have these other fundamentals. And when I showed you that map that shows Utah had the best GDP growth in 2024, we have to ask ourselves, why? Why are we doing so well? And I think the answer to that is a very well diversified economy that has a lot going on that can withstand a lot of things. And when I say diverse, I'm meaning economically diverse. So we have defense and aerospace and tech and energy and tourism. We have a mix of it all. And if I go to Nevada, they have, they have gaming
Vegas.
and
Yeah.
mining. Yeah.
Yeah.
If I go to Wyoming, they have energy. Colorado's quite diverse. They're similar to us, but they don't have as pro-business of an environment for business. And then I'll just mention that there's big things like what Northrop Grumman is doing in our state and that employment size, what Goldman Sachs is doing here and that employment size. There's just a lot of really good things that are happening here in the face of some challenges like tariffs.
I don't see other questions, so I'll jump in with one as well. I'll posit to start that, of course, you're an economist, as was the man you quoted at the end. So it makes total sense that you're framing the impact of tariffs and the risks of tariffs totally in economic terms. However, I'm interested in your thoughts on whether maybe some of the costs, the lost opportunities that you described at the end, are worth it for the other benefits that might come from tariffs, or at least are intended to come from tariffs, such as national security, or even reducing kind of income inequality, and that it creates more working class jobs.
Yeah.
And does anyone incorporate that? I guess would be the bottom line. Has anyone modeled that to incorporate those, to kind of monetize those benefits to see what it would look like?
Yeah, David, I love the question. The way I would respond is to make a couple of observations. I think what the administration is doing is incredibly bold. I think that there are some long-term benefits that can come from it. They want to rebalance global trade. If they rebalance it in a way that favors our country over the medium long term, that can help us. So they're doing some bold things. What I take complete issue with is the implementation. I think it's completely ham-fisted. Okay. In other words, I would think, okay, I want to do big, bold things. So I'm going to explain that to the American public, and I'm going to, enlighten us about what we're trying to accomplish and the way we're going to do it. And then I would do it in an environment where I created more certainty and ability to plan and to give businesses the ability to compete, in a more certain environment. And so that part of it I find a little, odd. And that's not even the right word. That part of it I find damaging to the economy.
Yep.
And
Understood.
yeah, and then the other thing I would say is that the big point that Secretary Bessent's tried to emphasize is that you have to look at all of it together. That we're trying to rebalance global trade, and we're all trying to lift Main Street. We're trying to keep Wall Street happy. We're trying to, they would argue that they're trying to deal with the debt and deficit, and that these tariff revenues are part of how they're going to help with that. But I don't see it. And I'll take the big, beautiful bill as a case in point. How hard would it be to get in a room and just agree that we need a 5-year path to balance of the federal budget? Just a 5-year path to balance, and then figure out, now working backwards, how do we do that? Through a mix of, revenue enhancements, that can be tariffs, can be a part of it, and spending cuts. And instead, we're getting things like exempting, overtime pay from income tax, which is I think, really bad tax policy. But I would also say that within the big, beautiful bill, I like the Medicaid work requirements. And one of the things I would tell the participants is get behind the headlines, because the headlines just confuse us. They're so simplified.
Yeah.
And like, if you look at the work requirements, they've exempted single moms, substance abuse disorder sufferers, people with disabilities. They're basically talking about able-bodied men who want Medicaid, that you need to work 80 hours a month. I think that's okay. We have an
Yeah.
economy with a labor shortage.
Yeah.
So there's a mix of things, and I just referenced that we need more from our federal delegation to help us here.
Yeah.
I see
Great.
the comment, what's your perspective on when the US defaults given the current nature of the big, beautiful bill? I think that's what the BBB is. Yeah, I don't see a default at all in the future. I think there's way too many tailwinds to help us there. But I do see distortions that come from, a bond market that's on fire and has high rates, and the moderating growth that it will require. And let's hope that we get to some fiscal rectitude pretty soon, because it's really problematic where we're at. I tell people it's like having termites in your house. That's what we've got going on.
Eats away. Yeah. Natalie, what you mentioned that your project, which is exactly what I think too, that will be in the end of this will be our average tariff import rate will be, 10 between 10 and 15%. Definitely more than 10%, because we'll have countries like China that'll be fairly above that. So you also had mentioned how tariffs generally historically have shown just not to be ideal for economic activity. Are those levels that you think would not be material to our overall economy? Where do we hit a point where we say that's material in the sense that everyone's going to feel it a little bit?
Yeah. Well, I mean, when I think of rebalancing global trade and a very well thought through and communicated trade policy, I think about, we went from 1% effective tariff rate to 3%. I could see us going to 6% and working through that just fine. The 15, that's just off the charts for me. But but this is maximalist. This is shock and awe kind of policy. Another way to think of it is that tariffs, well, economists don't like broad-based tariffs. We don't mind tariffs that are strategic. We don't mind tariffs that protect an industry of importance to our national defense. We don't mind protecting an industry that has strategic importance to our economy. That's not what we're talking about. We're talking about broad-based tariffs that only tax commerce, that get in the way of individual decisions. And an efficient economy is one where David and I trade because we both benefit. An inefficient economy is where you put an artificial barrier between that free exchange, and then we have to go work around it. And now we're creating deadweight losses and inefficiencies. And that's essentially what the tariffs do. That's what taxes do. That's why they call a tariff a tax. And the broad-based nature of it just hurts everything. So, I think it's both how they've been communicated and the extent of what they've done. Now, let's just do one other exercise here. I mentioned that the data is lying to us right now, in the sense that there's a 2-month lag. January, February, March didn't have these distortions, but April and May have them. And in June, we're only getting the April and May data. So we have to get to July and August before we truly see what's going on. It's invisible to us right now. It may not be in your companies. For sure, it's not in your companies. But in the government accounting, the national income accounting, we're not seeing it yet. And so maybe a good place to close, Troy and David, is just to say that the next 6 weeks, the next 8 weeks are going to be very active on the economic front. You're going to start seeing the data that sees the impact of trade. You're going to have the big, beautiful bill being, processed. This is fiscal policy. They go on August recess, August 2nd and August 3rd, House and Senate. So they want to get that bill done before August. It's not going to be easy to land it. And in the process, you also have the expiration of the reciprocal tariff 90-day pause. And then you have the debt limit, which everyone thinks is a mid-August deal. So they'll figure that out before they leave on their August recess.
Wow.
Yeah. So
Great
for me,
preview.
there's a calm. We're in a calm, believe it or not. We're in a calm
We're in
right
the
now. And
Eye of the storm.
my sense is that between July 15th and July 30th, it's going to be pretty interesting. So maybe that's a good place to close it. Well, maybe
Yeah.
if I end on a positive, there's no state I'd rather be in. No state.
Great job.
Thanks,
Well, thank you
everybody.
very much for that,
Hope
Natalie
that's
and
helpful.
Troy. Yes, and for the rest of the audience, please keep an eye on the World Trade Center Utah's communication channels and website for additional information. We hope you join us next week, and thank you again for attending. Have a great day.
See you guys.